HBAR just crossed a threshold that most people aren't even paying attention to. $172 million in USDC now flowing through Hedera's network. And here's what makes this wild. That's a 105% jump in just 1 month. While everyone's obsessing over price charts, something way bigger is happening beneath the surface. Institutions don't pour stablecoins into dead networks, they pour them into networks they're about to use heavily. Welcome back to the channel. If you're serious about catching these moves before they explode, smash that like button and subscribe with notifications on. Trust me, you don't want to miss what's coming next. Let's dive in. Hedera's been quietly consolidating while other altcoins get all the attention. But according to analyst Mark, who's been tracking on-chain data closely, USDC issuance on Hedera just hit $172.1 million as of October 23rd. That's not a typo. We're talking about a 4.74% daily increase, which translates to nearly $8 million flowing in every single day. Weekly growth, 93%. Monthly, a staggering 105%, adding $88 million in fresh liquidity. Now, I know what you're thinking. Stablecoins are boring, right? Wrong. Stablecoins are the fuel that powers every major crypto ecosystem. DeFi platforms need them, payment systems run on them. And when institutions start moving serious USDC onto a network, they're not doing it for fun, they're building something. Mark himself points out that this kind of growth often happens right before enterprise collaborations or major project launches go public. Translation: Hedera's gearing up for something big, but here's where it gets interesting. Despite all this liquidity flooding in, HBAR's price has barely moved. It's been stuck in consolidation, trading sideways while everyone doubts whether it can break out. This is classic accumulation territory, the calm before the storm. So, according to Mark, investors are making a huge mistake by focusing only on short-term price action. It's easy to get caught up in those quick moves, but, honestly, there's so much more going on beneath the surface. There's more brewing beneath the surface. The Hedera Foundation just moved 250 million HBAR tokens worth over $40 million into the staking account 0.0.800. For those who don't know, this account automatically distributes rewards to stakers. Pretty interesting stuff. That's a massive incentive for holders to lock up their tokens, which reduces selling pressure and typically precedes price appreciation. If you're an HBAR holder, this is basically free money for staking. If you're not holding yet, well, you might want to reconsider. Now, let's talk catalysts, because HBAR has several lined up like dominoes ready to fall. First up, the Federal Reserve. Recent inflation data shows CPI rose to 3% in September, right in line with expectations. This means the Fed is likely to cut interest rates again next week. And whenever rates drop, risky assets like crypto and stocks tend to pump. That's economics 101, but it matters because it creates the perfect macro backdrop for altcoins to run. Second catalyst, the Canary HBAR ETF. The SEC has had this application sitting on their desk since last year, and once the government shutdown drama ends, there's a real chance it gets approved. An ETF would open the floodgates for institutional American investors who've been sitting on the sidelines. So, think about what Bitcoin ETF approval did earlier this year. Yeah, the same principle applies here. From a technical perspective, HBAR is painting a textbook setup. The 4-hour chart reveals an inverse head and shoulders pattern. It's honestly one of the most reliable bullish reversal signals in trading. The head sits at $0.1547, both shoulders at 0.1630, and HBAR is now approaching the neckline. Once it breaks above that slanted resistance near 0.17, the gates open. Price has already bounced 67% from its October low of 0.10, and it's now trading above the 50-period moving average with momentum oscillators pointing straight up. In my opinion, this is one of those rare moments where fundamentals and technicals align perfectly. You've got institutional-level stablecoin inflows, staking incentives reducing supply, macro tailwinds from Fed rate cuts, potential ETF approval, and a bullish chart pattern all converging at once. The target? Analysts are eyeing $0.2550 as the next major resistance. That's a clean 50% gain from current levels. And honestly, given the strength of these catalysts, that might just be the beginning. Hedera's architecture is, honestly, uniquely suited for enterprise adoption, with its speed, low fees, and that solid governance model. Mark's observation about hidden momentum is spot on. Price consolidation with rising on-chain activity is basically a loaded spring. I've seen this pattern play out dozens of times across different projects. The staking move by Hedera Foundation is particularly clever. By locking 250 million tokens into rewards distribution, they're creating a powerful incentive structure. Stakers earn passive income, which encourages long-term holding. Less circulating supply plus steady demand equals upward price pressure. Basic supply and demand, but executed at exactly the right time when stablecoin liquidity is surging. Look, I can't predict the future, but I can read the signs. And right now, every indicator is flashing green for HBAR. The stablecoin data doesn't lie, the technical setup is clean, and the fundamental catalysts are stacking up. Whether you're already holding or considering a position, this is one to watch very closely over the next few weeks. If you found this analysis helpful, drop a comment below with your HBAR price prediction. And if you want more deep dives into altcoins before they pump, check out my other videos. Hit that subscribe button and turn on notifications so you never miss an update. I'll see you in the next one. Remember, cryptocurrency is highly volatile and risky. Nothing in this video is financial advice. I'm just sharing my analysis and opinions. Always do your own research and never invest more than you can afford to lose. Stay safe out there.